Welcome to the new video where we will talk about the cryptocurrencies trading strategy. Today we will consider one simple but very effective EMA ribbon strategy. Let's open the Bitcoin daily price chart as an example. So, as found on the chart, EMA ribbons, or in the future I will simply call it ribbons, are different period moving averages. Double-click on the indicator to open up the settings. As you can see, we use moving averages with periods of 21, 25, 30, 35, 40, 45, 50, and 55. This indicator is often used to determine the direction of a trend. For example, when the price is trading under all the lines and they do not intersect, then the market is in a bearish mood and price goes down. And the opposite, if the price is above the lines and they do not intersect, then the market is dominated by bulls, which means there is an uptrend. But we will use this indicator in a different way. So, here is the essence of the strategy. Strategy rules. To open short positions, we need to see the yellow line with a period of 21 to cross the white 55 period line, from the up to the downside. After that, a short trade is placed. Stop loss can be put either at or slightly above the 55th period line, or above the local higher high. In our strategy, we will not use stop loss for Bitcoin, and also we will not open any short positions. A little later, while viewing the test results, you will understand why. The main thing to remember is that each cryptocurrency or other asset not only has different behavioral features in general, but these features may also differ on different time frames. Therefore, before using any strategy on any crypto, you should first test various options to determine the best one. For long positions, the rules are as follows. The yellow 21 period moving average must cross the white 55 period line from bottom to top. Then a long position is opened, and the stop loss can be similarly placed either under the 55th line or under the local lower low. We will not use stop loss. For short and long trades, profit or loss, which also happens, will be taken when the opposite signal appears. So let's look at an example. On October 2, 2021, a long signal appeared, which means that the 21 period line crossed the 55 period moving average. On December 4, 2021, a short signal was received, which means it is necessary to close the position and take a profit of plus 11.5%. Further, if you plan to open short positions as well, then this would be the best time. We will not do this. Strategy testing mode. Now let's go to the automatic strategy testing mode and consider all possible trades and results. So, setup number 1. Starting balance, $1,000. Trades, short and long. The trade is open with 80% funds of the available total balance to increase the potential profit due to compound interest. Stop loss, at the level of the outermost moving average. Results. Despite the fact that out of 134 trades only 37% were profitable, the profit was $329 million, or 32 million%. Wow, that's hard to imagine, but here is the power of a compound interest. The profit factor is 4.1. Setup number 2. Everything is the same, just remove the stop loss. So, as you can see, the amount of trades has decreased, and out of 53 trades, 45% have turned out to be profitable, and the total profit is $318 million, or 31 million%. The profit factor is 4.1. As you can see, the profit is less than in setting number 1. But why did I say that I would open a position without a stop loss? That's because I plan to use a small leverage to further increase profits. Setup number 3. Everything is the same as in the previous setup, but we will use 2x leverage. For example, the first trade, when the balance was $1,000, we previously opened with $800, which is 80% out of the total balance. This time we will open twice as much, namely $1,600. Results. The same 53 trades and the same 45% winning trades would now bring in $12 billion, which is almost 4 times more than in setup number 2. But if we had included such a leverage in setup number 1, we would have completely lost all funds. Remember, by risking twice as much, we significantly increase the risks of an entire balance loss. Setup number 4. We do not use leverage, but will only open long positions. Results. Out of 26 trades, the number of positive trades is 57%, and the profit factor is no longer 4.1 as before but 13.5. The profit was 486 million, which is more than in setups 1 and 2. Setup number 5. Let's add 2x leverage. And with the same number of positive trades and profit ratio, the final profit is as much as $62 billion, which is 5 times more than in setup number 3. Hope this information was useful for you. Please take your time and hit the like button to show us your support. It is free for you and a great motivation for us. Also subscribe to stay updated every time a new video comes out. Thank you for your time.